Maybe gold going up like this is telling us something about the future dollar. Maybe it was a leading indicator.
How many times have we heard it said that history often repeats itself? And it seems we're seeing that in 2025. We've talked for months now about the dollar being in a downtrend and gold going up. We've seen that happen this year. Um, can't say it happens all the time, but it is now. What do you think, Steve?
Well, I think one, this is really important for understanding what the economic environment, what the market environment's doing. It's also really important for portfolio construction. It has implications if you're, say, holding U.S. stocks and U.S. bonds, and you don't have any diversification into real assets or precious metals. All this is pretty important even to investors who aren't following it. And then I would also say it's interesting because I was just talking with Joe earlier, and he called, why is gold rising the most important question nobody's talking about. So, maybe we should talk about it.
Okay, Joe, talk about it.
Oh, you're waiting on me.
Yeah.
Well, hold on one second. I'm checking something here real quick. I just wanted to see something very quickly. And yeah, see, that's interesting. Yeah, I think it is a very, very interesting question. Why is gold doing what it's doing? And by the way, it's not what it's doing is not new. And I would say too that if you're long gold and you've been long gold for a long time, like we have, gold is always part of our portfolio, and it's really been on the rise since 2016 when it hit it was about $1,000 back then. Now we're 3,600 on the way to 3,700 apparently. So why have we gone up? Why is gold up 3x since 2016? I know a lot of people would blame it on things like QE and so forth, but I'm not sure that's really it. But I don't really have a great answer for why gold is up as much as it is. But I will tell you this, it doesn't usually go up in good times. So that's what worries me because we don't seem to be having any huge economic problems. I mean, look, we know that there are issues with the global economy, the US economy. We have problems with some of it. But in general, the economy is not terrible. We would expect to see gold rising a lot in a situation where you would have inflation, where you have a very weak dollar. We don't have any of those things. We have talked about a falling dollar this year, and we actually I wrote about this even before this year about gold and the dollar, and I said, maybe gold going up like this is telling us something about the future dollar. Maybe it was a leading indicator. Well, maybe it was. I don't know, but it certainly has knocked the dollar down this year. But the amount the dollar has fallen does not in any way come close to justifying the rise in gold. Now, I will say, we look at history, and history says that when the dollar falls, gold goes up, but it's not as simple as that. Uh, Gold does best if you go back to, I don't know, we've got data back to gosh, on gold, we got data going back a long way here. Let me see, how far back does this go? Gold, well, actually, you know what? 1970, 1969, 19, no, not 1969. That's not that long, but gold was fixed before that because we were on a gold standard. So once we came off of the gold standard and so forth, gold started to float. We've got data back to then, and we know that it's not just that you get gold going up when the dollar goes down. Gold goes up a lot when the dollar's falling and interest rates are going up. Hmm. Why would that be? Well, that's because it includes the 70s, which is essentially a stagflationary type environment where you had rising rates, you had rising inflation, and you had weak growth, and you had a falling dollar. So that's those conditions, and that number is skewed. I mean, the average return when rates fall and dollar, or excuse me, when rates rise and the dollar falls, average return on gold is 38.7%. Now, I don't know how many years that is. It's not a whole bunch. It's not a big sample size. But as a contrast, when the dollar's falling and interest rates are falling, gold's up an average of 13.2% a year. So obviously, the dollar falling is a positive for gold prices, but interest rates have a big impact too. So here's what's odd. Yeah, interest rates are down this year. So that doesn't work either. My point is, this is a really odd situation. And I don't really have a good answer. I mean, look, there's lots of things that people have pointed to. We know that central banks have been accumulating gold. We don't, we can see that from the IMF. The IMF gives you the number of troy ounces that every central bank owns, and that gets updated periodically. When you look at, by the way, there's a chart floating around out there that shows gold holdings at central banks versus treasury holdings at central banks. And probably this month, the dollar value of the gold held by central banks will exceed the dollar value of the treasuries that they hold. Now, a big chunk of that is because gold's 3 times what it was in price since 2016. But they have also been buying gold, in particular the Chinese. And I will bring this up too, man, a really long time ago, a really, really long time ago, probably, gosh, I don't know, 2007, 2008, somewhere around there. I wrote a piece and God knows, I don't even know if I can find it these days, but I said, first country to a gold standard wins the game. And the Chinese are accumulating a lot of gold, and you got to wonder why they're doing that and what they might be thinking about in the future. But I don't have any inside information there. I don't know if they're going to do that, but it is kind of interesting. Look, guys, we're going to continue to do some work on this because it is very interesting to us. And I would say too, from a technical standpoint, when you get a vertical move like this, it usually flames out pretty quick. This one hasn't. And that really has me pretty much on edge. I don't know what to make of it. So we're going to have to continue to do research, and hopefully we can find out what's going on.
Steve, even doing the research and looking at things, it's got to be tough to manage funds in this, what Joe described, and rightfully so, is kind of a weird point in financial history.
Yeah, well, I think it kind of depends on what your strategy, and if you don't have a strategy, yeah, it might be difficult. If you're just doing what's worked in the past and hoping that's going to work in the future, well, this is a problem because all of a sudden something's happening that wasn't happening before, and it's a meaningful thing. What we try to do is we try to run a strategy that's we call our fortress strategy that works in different environments. And yeah, we can do some tactical adjustments to go a little bit heavier on something, a little bit lighter on something else as we see environments changing. And so for us, this is something we key in on. And you can hear Joe say we don't know what's going on, but if you listen closely, there's some suspicions there. Um, so there's definitely a suspicion we might have a potential of more kind of a stagflation environment. There's definitely a suspicion that we're not necessarily fans of current monetary and fiscal policy around the world. There's definitely a suspicion, a very strong suspicion, that gold might be a leading indicator for moving into a new environment. Now, one of those things about leading indicators, especially when you look at it from a technical perspective, if you get something like Joe was talking about, you get this big move that kind of flames out. Well, then it wasn't a leading indicator. That was just a little blip that when you look back in charts previously, it looks like a little blip. But when it doesn't flame out, then it's a leading indicator. Now, and you kind of have to look to see, did that move, is that move been sustained? Did it keep going? And this one's sustained and keep going. So it starts giving more credence to this theory that it is a leading indicator. It is showing you that you've got an environmental change. And then going back to kind of portfolios, well, as our suspicion gets stronger and stronger, you're probably going to see it reflected in stronger and stronger tactical adjustments to the strategic model, right? But we're not going to just make one big swooping change. We're going to let the evidence build, and the evidence gets better. We're going to pick our spots. But I would say I have a strong suspicion that our portfolio a few years from now is going to look very differently than it did a few years earlier, and we'll probably get there as we see things continuing to line up. But I think there's a very strong suspicion that we're moving into a different environment that's going to be reflected in a different portfolio.
Joe, I've heard both of you now talk about suspicions and strong suspicions. I think the important thing I'm seeing from both of you is there's no panic involved in that.
I'm too old to panic. There's not a whole lot that can happen in markets that I haven't seen before. And I've seen big run-ups in gold before. Listen, what Steve is alluding to there about tactical changes, let me just say this. In a lot of ways, you can make tactical changes by doing nothing. Now, that doesn't sound, it's like, really? How can you do that? Well, portfolio management is not just about having a strategy and sticking to it. It is also about knowing when to allow something to continue to grow and when to trim something. So, for instance, most of our accounts right now, if we ran a rebalance, we would have to sell gold because it's grown in value. So we're overweight gold already. So we didn't start that way. And that happens a lot in our portfolios. And the real magic in portfolio management is knowing when not to do something. You know, everybody thinks that getting this right is about doing something. Sometimes it is. Sometimes it is about making a change that absolutely has to be made. You know, there's been a lot of talk, for instance, about the shift from domestic to international, where internationals outperformed this year. Is that a durable change, or is it something that's going to be ephemeral? Is it not going to last? I don't know. Now, we made a change coming into this year where we did add more international, but we still don't have a maximum international exposure right now. It's grown. And again, if you did a rebalance based on where the model is right now, we would have to sell international. We're not going to do that right now. Why? Well, because when the dollar falls, international outperforms, and the dollar is still falling. So we're going to let that trend run. My point is that it's not always about what you do. Sometimes it's about what you don't do. Listen, gold's going up and we own it and we're happy. At some point, we will decide that we need to be less happy, that we need to pull back a little bit. But right now, you let it run. Listen, one of the hardest things in this business by far, there's two things, two really hard things. When you have something that's working and it's going up, the ability to just let it keep going up and not sell it and take the profit is hard. And here's the one that's even harder. When something's going down, you got to know when to throw in the towel and say, I messed up. Listen, this business is about managing, more than anything, it's about managing yourself. Listen, it's psychologically, it's tough. Okay, that thing goes up a bunch. You want to sell it because you want to book the gain and say, look what I did. I did a good thing. I made a bunch of money. Now, if you come back 6 months later and it's a lot higher than where you sold it, then you might not be too happy about that. But most folks in this business are not going to go back and say, yeah, I messed up. I sold too soon. They're not going to do that. They're going to say, I sold and made a bunch of money. Now, the tougher one, like I said, is when things go down and they don't go your way. And here's the thing, you know, you don't want to sell, because if you sell, it's closure. I made a mistake. I realized a loss, and gosh, look how bad I am. So here's the thing. You got to let your ego get out of the way. When things are going up, I don't always know why. And listen, sometimes people take these prices to an extreme that I would never agree with. The fact that we own something we will own a stock that's really, really expensive, more than expensive than when we would buy it if we already own it. We'll hold it. We may not buy it for new clients, but we'll hold it. Same thing when something goes down, you just got to realize, look, you're not going to be right all the time. And in fact, I'm going to clue you in on something here. You can make a lot of money in markets being right half the time, 50%. If you're a stock trader, if you're right half the time, you can make a ton of money, because it's not about how many times you're right and how many times you're wrong. It's about how much you make when you're right and how much you lose when you're wrong. If you make 50% on all your winners and you lose 25 on all your losers, you're going to make money. You're going to do pretty well. Now, listen, most of our individual stock models have batting averages, if you want to put it that way, in the 60s, but not all of them. Some of them don't do that well. But even a batting average in the 60s makes it pretty easy to manage the portfolio. But my point is that, look, you can't let this stuff get to you. And like I said, portfolio management, the art of it is knowing when not to do something. So right now, we're not doing anything. We're just watching and saying, that's awesome. Just awesome. And by the way, in private going, gosh, why is gold going up? We really don't know the answer to that. And by the way, we may not ever discover the answer. There are times when things just move and you don't even know why. So listen, we're obviously doing our research on this. We're trying to figure out, does it mean more than there's a mania for gold for whatever reason? By the way, one last thing I'm going to add. And you guys know I'm not a Bitcoin fan. I'm not a crypto fan. I'm really not. But when we think about Bitcoin specifically, not anything else in the crypto atmosphere, nothing else, just Bitcoin. Bitcoin was designed as kind of a libertarian project in a lot of ways. It is anti-government. It's anti lots of things. And it's supposed to be a store of value. That's why they set it up so that you can only mine so many coins. There's a finite number and all those things, right? It's not going to devalue like a dollar is. That's arguable since it's a speculative asset too. But what's interesting to me is that Bitcoin has gone up kind of not in line with gold, but it's gone up a bunch too. And it's another asset that doesn't produce anything. Gold and Bitcoin, neither one, they produce anything useful. They don't pay dividends, nothing like that. Why are people parking capital in inert things? That doesn't sound real positive to me. Why aren't people investing in things that produce wealth instead of producing or putting money into things that they hope preserve wealth? Preservation versus growth. There are a lot of people are choosing preservation right now. That worries me because we need investment in the economy to grow. So, like I said, we'll keep an eye on this. It's not anything to panic about. We're certainly covering it in our portfolios, and so we'll let you know if we figure out what's going on.
And if you've decided that doing nothing at this point is the right thing for you, there is something you do need to do. If you haven't signed up for our weekly newsletter, you need to do that right away.